What's up, guys? Roger Mansourian here with Norv Hakopians. We are going to start doing a weekly show, everything mortgage, real estate related. Norv and I have been working together for several years. We've both been in the mortgage industry a long time. Norv has been in the financial industry and knows the market, better than anyone I know. So our goal is to just bring you news on what's going on with mortgage rates, housing, stuff like that. So if you're interested, please continue watching our videos, which we're hoping to do multiple times a week. So Norv, how you doing today?
Doing good, Roger. Thanks. How are you?
Good. All right. So let's just dive right into it. Obviously, the big news is Russia and Ukraine. The war has just started and, it's very sad, but we're just going to talk about how this is going to affect the mortgage market and the market in general. So just a few effects of the war on economics. So Russia has their own Fed funds rate like we have here. So they have their version of it. So you know how the government's been talking about raising rates a quarter every 3 months or 6 months or something like that. So 0.25%. The Russian Fed funds rate was raised from 9 to 20%. So rates have gone up like crazy in Russia, and their ruble, their currency, has dropped by 30%. A lot of Europe is unifying against Russia. So Sweden and Finland contemplating joining NATO. Sweden and Germany are sending weapons to Ukraine. Even Switzerland, who is known to be neutral on everything, has even thought about proposing sanctions on Russia. Ukraine is considered the breadbasket in Europe. So they provide a lot of bread, corn, wheat to Europe. So that's not gonna happen right now, obviously. So they're gonna have to get it elsewhere, and it's causing inflation in corn and wheat. So a lot of economic impact. So how do you see this affecting mortgage rates in the short term?
Well, the uncertainty, like with everything you just pointed out, that's going on via trade and sanctions, and the uncertainty of war and escalating war is helping out mortgage rates, which is like, they say war is never a good thing for anybody, but mortgage rates are benefiting from it, considering the sort of uptick that we've had in the last couple of months since the start of the year, based on the Fed stance on how to control inflation. And so the Fed's in a tough spot, and we're seeing rates get better. And so it's sort of nice for all of our loans that we have floating. We've been careful about all that, and so far pricing has gone better. And it's just all on how far this continues to escalate. And we're keeping a close eye for our clients, and depending on how things sort of pan out, we'll see it impact, and it already has impact rates for the better. And it all just kind of comes down to excuse me, this week there's a lot on the front, on the economic front, as far as like the overall, there's jobs number that's coming out later on this week. And then we have the Fed, Jerome Powell's statement to the Congress on Wednesday and Thursday, to the House on Wednesday, and to the Senate on Thursday. So that will be a really important thing to watch out for, and see where the Fed stance is on inflation versus the impact of war.
Okay, great. So guys, be sure to tune in. So any kind of breaking news, we're going to try to make a video right away. So like Jerome Powell speaking to Congress about inflation and everything, like super important. Jobs numbers coming out, which affects everything else. So stay tuned. We'll try to update you guys as much as possible on those. But basically what I'm hearing, Norv, you say is like, we're going to have a short window here where rates are going to be good compared to how much they've gone up, right? So obviously the days of 2.75 and stuff are behind us. They went up all the way like past 4%, but we're going to have a window here where rates are going to be good. So if you're in escrow, or you're about to put in an offer, about to get an offer accepted, you might have this window while this war is going on to lock a good interest rate. And also if you're refinancing, right? So if you've been on the sideline, home values have gone up like crazy. So if you're looking to tap into your equity and consolidate debt, or buy another property, or build an ADU, or remodel, whatever it is, you're going to have this little window where you can get a pretty good rate on a refinance, a cash out refinance, to accomplish your goals, whether that be remodeling, buying another property, or whatever the case.
Absolutely. Exactly, Roger, because assume this wasn't the case and we weren't in war and we had the Fed meeting coming up. The economy's crushing it on all cylinders, right? Jobs number, inflation's still like running rampant. And so, we would have been probably seeing rates having continued to got much worse still to this point. So
Yeah.
this has sort of put a lid on it, which is nice from a rate standpoint. But assuming that like that had never happened, we would have been in a completely different situation. But to your point, I think that the key point here is that if you're in the market for a new home and or refinance or possibly cash out, well, you're getting a lot more purchasing power than you would have otherwise. And so this is a great opportunity for those people that are lucky enough to be in that situation to take advantage of that more to the purchasing power that they are getting now from as a result of all this. And whether it's a refinance, you might be able to get that better rate, which in turn might get you some more cash for the same payment. Because of this opportune window. And we don't know how long this may last. So obviously talks have kind of escalated and Russia sort of brought on like nuclear talks as a threat. Could who knows what it really means? Is he playing poker or is this real? And if it is real, we don't know. Nobody really knows. The market doesn't know. So that's a lot of things are showing why that there is the uncertainty at the moment, and so everyone's just kind of waiting and seeing what happens. But the moment this thing turns and stabilizes in their talks and they negotiate some sort of peace talk, flip of a dime, and we're seeing it. We'll probably see one or two really harsh adjustments on mortgage rates back, and it'll reverse everything that it's done over the last week. So things can turn pretty quickly. And I thought about this, and I don't know much about geopolitics, or politically, not much of an expert in that field. But one thing I do know from having kind of looked at all of this is Ukraine kind of holds the power to stop the war. And so Ukraine could come out any moment and say, and this is all we're trying to kind of tie this back into rates, but they can come out any moment and say, we don't want to join NATO. And that's what Russia wants, is for the Ukraine not to join NATO. This is all about that. And the moment like their president has all the control to stop the war, and they're not, they do want to join NATO, obviously. But the moment they say that, the war stops, Russia backs out, and mortgage rates will reverse pretty quickly. So we want to be careful as to like not float for too long, but but long enough to where we can take advantage on rates for our clients.
Yeah, we don't know when this war is going to end, but again, what Norv is saying is basically as soon as this war ends, rates are going up. So again, really tight window here. If you're watching this video and you've been contemplating, like call your loan officer, call Norv, call me, and lock that rate. If you're looking to do a cash out, or if you're buying a property and you're in escrow, you got a short window. If they, I know Russia and Ukraine are meeting today. If something were to happen, they make a deal, rates are going to go back up. So that's basically the gist of the mortgage news today. So thank you guys so much for joining us. Thank you, Norv. We'll update you guys. Yeah, we'll update you guys as the news progresses. And if you find these videos valuable, follow Norv, follow me on Instagram, YouTube for more updates on mortgage and real estate. See you guys next time.
Thank you. See you guys later.